Hey, good morning, everybody. Bob with Trade Genius. It's the 23rd of April. I want to give a little bit more context to the sell-off that we had over the last 2 days in the stock market. And for those who could see the chart. For those who are just listening on the podcast, let me explain it. In the course of the S&P 500, there was only 11 occasions where we had a stock market move that started from the high on Thursday open all the way to Friday close. It was 11 times. It's pretty unprecedented. Those 11 times, nine of those 11 times occurred during one was basically the tech sell off in 2000 to 2002, and the other one was the great financial crisis of 2008 to 2009. The other three, I guess there was eight of them. The other three was there was in 2011 was basically the Arab Spring when the Federal Reserve once again was screwing up the markets and caused a great pain in Northern Africa with food, caused a crisis in our country. 2015 was a crisis the Chinese made for us during one of their market sell-offs. And people are arguing that the last 2 days was a combination of the Fed and the Chinese devaluing their yuan. If you remember in 2018, when the communists went ahead and devalued yuan, we had like a 18% sell off, like in a matter of 60 days. So that's something that bears watching. Now, a little bit on the good news front with this situation is that these moves down, these tend to kind of have a bit of a V to them. Okay, so expectation at this point is the math tells us that we should have follow through down on Monday. There should be some follow through down on Monday, and if people that can look at the chart can see that, not always, but basically 9 out of 11 times. Um, well, 8 of the last 10 times. This is the 11th. Has done so, and then after that, it tends to be a bit of a reversal. So now, if it's Chinese induced, you know, selling continued for a few days afterwards. So that's a possibility. With the Fed, people are a little afraid, and we still have targets down at 415 on SPY, 410 on SPY, and then we have to worry about is that setting up basically an upside down cup and handle, which could drop us another basically 40 points on SPY or 400 points on the S&P. So, but the probabilities tell us that we should get a bounce at some point early next week. Now, after that, we're going to go right into the Fed meeting the following week. So it could continue from there, or we can get a bounce and then go sell right back off again. The other thing I want to show you is and talk to you is that we have. Let me go into the VIX here. So the VIX is sitting at 28, and usually when it gets over 30, it has a hard time maintaining. So you're within 2 weeks of basically the selling relenting, just because puts are getting just too expensive for people to maintain. And you remember, puts have a time value associated with them. And then once people start selling their puts, the market makers are then going to reverse course on the futures. And I'm going to show you the PCC too and talk to you about that. Is that this is the put call ratio? We're at 1.3. 1.3 on the top side, around 50, 55, 6.6 on the downside, is that when you get up to 1.3, okay, the puts are overwhelming the calls. And two things happen. Think about it in your own trading. If you don't have puts, at some point you want to monetize that, right? And so you'll sell the puts and take the profit if you're keeping the shares, or if you're just speculating, you just sell the puts, or you close the puts because you also sold your position. And so those things happen as we get out in time. Remember, selling options is more profitable than buying options for most people. And at some point, sellers will overwhelm the buyers and the market will reverse just because that's the nature of the derivatives in which we're living in. So it's kind of where we are, and I think after the Fed does their thing, unless they surprise next, I don't know, is it next Wednesday? Unless they surprise us with a move that's even bigger or oil takes off again, then we'll probably get some sort of relief bounce, and then we'll have to um, look at how the earnings are doing for this quarter too. So it's just really, really a lot of action right now, and a lot of it's cross current, and so we're just going to be careful. But I just want to give you a little bit more insight on the probabilities. We're down pretty hard, pretty fast, unless this is an unprecedented move because we're in unprecedented times. You still got to rely on probabilities, and so when those probabilities prove false, okay, you get up, you shake off your boots, and you reevaluate what you're looking at here. But at this point, my expectations is we'll have a turnaround Tuesday next week, and then we'll see from what goes from there. So I'm going to talk a little bit more over the weekend about what stocks maybe to focus in on both sides here. Maybe over the next 3 to 4 months, we're going to have to simplify our lives here because um, they are draining liquidity out of the system, and so you're going to want to buy things that have absolute pricing power, and then you're going to want to be able to short things that are high price to sales. And I'm going to go through that on my next podcast. So thanks for listening. I'll catch you guys a little bit later. I'll probably pump a few of these out this week, and there's a lot to go over, a lot to think about, a lot to worry about, and a lot to be hopeful for. I'll see you later. Bye.